Hello, friends. Chris Kelly here. Okay, late in the week, fall is upon us. Let's take a look at what's going on in real estate. Um, Interesting. Let's see. I will minimize me right away. I would say the sold numbers are down quite a bit. Not again. We've missed the buying season for school-based decision making. There's a lot of things going on right now in the world that I think are causing some pause, or at least they have been. The listing inventory is coming up, so people are recognizing that, hey, okay, we need to sell something in order to buy something. There's less pending than there was last week, but we're up quite a bit over this time last year. So I would say, all in all, I'd say there's more of a pause, even though there's better interest rates. I mean, there's things that are going on right now in some regard that are just fantastic, but some things that are making it a little bit harder and a little bit slower. So 45 days average, 20-day median days on the market, that number has just ever so incrementally and slightly crept up. Though, again, this number, these two average and median sales price numbers have remained fairly even keel. So I'm going to pivot to this guy, which is a little bit more general market information than the graphic that I put out every week. So you can see that, this is that right here. Let me see if I can zoom this in. Yeah, I can. So this is new listing inventory this August, or during the month of August of 24 versus 23. That's all some key data, August to August. New listings are actually down. Pending sales are dead even. Closed sales are also down. So there's just less overall activity in the Portland metro market. Average and median sales price are up ever slightly. Nothing dramatic, but they are up slightly. I talk about the market being flat. This basically is that. Total market time's gone up, Portland metro-wide, about 11 days. And I, you don't see that in my graphic because it's week over week. But if I were to pull up a year ago, you would see that slow incline. And this total is an average, by the way, not median. I look at both because I think that the median is arguably a more important metric than the average for all the reasons that I've described before. So here's another interesting nugget. So active residential listings in Portland metro, they're up, like I said before, they're up over 1,000. You're looking at August at what is that, 58, almost 58.50 over 47 and change the year prior, and 47 and change the year before that. So definitely a bump in inventory. It's not like, oh my God, dramatic, but it's a bump. So there's more things, and that has something to do with why it's taking incrementally more time to sell. Not dramatically, but incrementally. Let's see. What's the one that this is the one I wanted to look at. So total market time, it's up, like I said, ever so slightly. Definitely up from 2022, but that number has just been, over the last couple of years, moving up very slightly, as has average and median sales price. I show this differently on the graphic that I put out every week, but you can see it over a trend line. In this case, this is a long trend line from back in 03 all the way to now. So at any rate, decent information. I'm going to have a link to this. In my post. So you should be able to link and look at all of that information. It's pretty good statistical data, actually, and it's pretty user friendly. So anyway, I hope that proves helpful. We're getting into the fall season. I'm doing a yard renovation right now. Hopefully next year I have the yard I've always hoped for. We'll see how it goes. And that's really about that. I mean, it's interesting because, like I started saying earlier, there's some metrics that you would think would just make the market turn up, and that hasn't happened quite yet. I think that interest, I talk about interest rates being in the fives. If you read every article that I've come across, median or average, rate for a 30-year fixed is 6.5 or 6.25. It's always in the sixes. Though two of the lenders that I work with fairly regularly have rates without any weird points attached or any weird cost associated in the fives. So I think what's going to need to happen before the masses enter the market is all of the lending numbers, or the vast majority of the lenders in the marketplace, are going to have to be in the fives, and they're not yet. So I think they will be, but they're not yet. And the other thing that happens too, people are like, hey, why hasn't rates gone down even more? Rates price ahead of the Fed making a decision about the overall lending rate of money. Long-term rates and the federal lending rate are two different things. They're related, but they're two different things. So the markets anticipate what they're going to do, and they price it in ahead of time. And that's what's happened. So rates came down, and now they're kind of living there for a bit. And we'll see probably this next week, I'm guessing, whether they stay there, whether they creep up, or actually whether they go down some more. The double-edged sword in all of this is jobs numbers have to be crummier. Some metrics have to be crummier in order for rates to get better. It's just how it works. And so some people that would benefit from lower rates by the time they exist won't be able to benefit from them. It's just kind of a weird catch-22 in the world of finance. So anyway, I hope this proves helpful. As always, we are here to help. We're here to help you make decisions. We're here to answer questions, address fears and concerns as best we can, and just really give good guidance and good information so that you can make good decisions. So if there's something we can be doing, don't hesitate to reach out. Let's talk about it. And as I always say, till the next time.